Hey everyone, welcome here. Brad Elias here and Keith Wolbaum. I always pronounce your name wrong. Is it right? Keith Wolbaum?
Close, very close.
Okay, you go for it.
It's Keith Wolbaum. I am with the Wheatland team, Castle Mortgage Group. I've been in the industry now for close to 16 years.
That's a long time.
Very long time. I have done virtually everything in the banking industry. Everything from being a bank teller all the way to collections to now lending out money in mortgages and stuff. So
I know this is for a different conversation, but I would love to hear stories about collections. But we won't go there today.
No.
Because that's what we're not talking about today. What we're talking about today is a lot of my clients, a lot of my friends, they have lots of questions about mortgage renewals. And so a lot of people are looking at, okay, so they've had a fixed mortgage for the last 3 years or 4 years. And now within the next year or two, they now have to renew their mortgage, right? And so there's a lot of anxiety in people's stomachs about like, am I going to be able to afford the payment when it comes due? And so we're going to get to that today. But first, I want to know, like, so why did you choose the mortgage industry and the banking industry? Like, what? I mean, I never thought of wake up in the morning. I'm going to be a mortgage broker. Like, I don't know of a lot of people that have the passion for that. And when I talk to you, you do. So what drew you to this industry?
Well, it's a surprise story, actually. So when I was in high school, you go through all your stuff and they teach you what you want to do. I actually want to do woodworking.
No way.
And I really wanted to do woodworking, was really good at it. But I couldn't, my family didn't have money to go to school and stuff. So my guidance counselor at the time said, hey, a local credit union is hiring employees for a work program and they're going to pay for high school, pay for university, as long as you stay with them so long. So I thought this would be a good way to get into trades and stuff. So I did an interview and got the job, which was great because out of the high school program in Winnipeg, they picked only 5 candidates and there's about 45 applicants that went through, which was great. Got in, a couple of years go by, and I actually fell in love with the industry. So seeing how money worked and debt worked and getting people loans and just finances in general was what really sunk in and got me into it. So after a while, I started going, well, don't want to be a bank teller forever, or what kind of other stuff things. So I worked really closely with a consumer lender at the time at my old job and got to work with him a lot. And it was really good. Started learning and seeing what he did. And it kind of just like sparked there going, this might be something that interests me.
So one thing that you've said numerous times, and Keith and I talk a lot when we're working with different people wanting to buy their first home or a second home or third home, what I appreciate about is you really care about people's financial position. It's not like, let's just push this mortgage through and get the deal through it. You really care about, okay, so they're not able to do this. Can we go with something lower or higher? Like, you're really trying to find out the best position for people. And so how did that come about? Like, what's the story behind that?
So that story actually comes back to my family. So there's parts of my life that my family got a split. So my parents are divorced. My mother didn't know how to manage her finances very well. So when I started learning about banking and finances and stuff like that, I started doing our own budgeting stuff at home. So that came to light, and I looked at going, well, if my mom's having problems, how many other people are having problems? So I started helping other people in our community just with little budgeting stuff, and I was really good with numbers, and I've always been good. Any of my high school teachers will say, Keith, when it's time for you to get a job, make sure you have a computer. Do not do writing. You can't write. It's not legible. You can't spell. You can't do things. My wife will happily say the same thing. No, don't. You're not spelling. Like there, and there. Good luck. I'm glad there's a computer that fixes all that grammar stuff because there's no way I can do it. But there's a lot of people in the world that, have debt problems. So one of my favorite TV shows, actually surprisingly growing up, was Debt to Us Part.
The last show.
It was the last show a lot of people watched, but I liked doing it because she taught a lot of different tactics and tools. So I actually got some of her information, and then I started doing budgeting on the side growing up for families and kids that were just learning.
That's cool.
So I really liked that component, and doing that with mortgages now is really good because you can actually see and help people different ways, saying, this is your actual budget. Yes, we can qualify you this high, but with your budget and what you really want to do in life, maybe you should come down just a notch or so. But if you do find that dream home, then we maybe can stretch you up that high. But let's not start there.
So as I mentioned before, so there's people that feel like they're coming to the edge of a cliff, and so I don't care if people know my numbers. So I was one of the lucky ones that was able to lock in at 1.75 about 2.5 years ago,
Yeah.
which is amazing. I don't think we'll ever see those rates ever again in our lifetime. And I know of a lot of people who are locked in at 2.5, even 3%.
Yeah.
And they know that in 1, 2, 3 years, they're going to have to refinance. Their 5-year fixed is going up, and some of them are going to have to refinance at 5%, 5.5, even at 4.5.
Yeah.
If you go up from 2 to 4.5, it's a huge jump, right?
Yeah.
So I'm just curious. We chatted about this the other day a little bit, but I want other people to hear this. So for me, my mortgage will be around $250,000 in 2.5 years. So hypothetically, let's say rates stay the same, and now we're hoping they go down, but
We all
hypothetically, rates stay the same. How much will my mortgage go up? So right now, I have about a $1,200 payment, mortgage payment. How much would it go up if we're thinking about current interest rates?
Well, with current interest rates, if you're keeping your amortization the same, so that's the amount of years left on your mortgage. So, Brad, you probably had a 25-year mortgage to start with.
Yeah.
So at Renewal, 5 years, 20 years left. So we keep that there. With the current rates we're seeing and your size of mortgage roughly, don't scare people, but $500.
Okay. That's big, because a lot of families that I talk to, and I think a lot about my friends who have like 3 kids or 2 kids or whatever, and their grocery bills have already gone up $500 a month in the last year. So you're talking that on top of this, that's $1,000, like groceries plus mortgage. We're talking about a $1,000 increase on people's budgets. So that's
100%.
$12,000 a year. Like that's a huge. And I know that I'm fortunate. I bought 7 years ago on a different house and was able to get the upswing of the market. So I know I have more equity than a lot of people, right?
Yeah.
So what is the average mortgage that people have?
You know, we were actually at a summit this week, or actually last week, and we were talking about those numbers in Manitoba. The average mortgage amount right now, a couple of years ago, used to be about $295, $200, about high 200s there. Now they're saying it's more about $350.
Okay, so $350. So let's say a person is fixed at 2%. The payment, what do you know roughly what that would be?
Right now, if with the new rates, if they come up for renewal, your payments would roughly go up about $800 to $1,000. So it is a lot higher.
Okay, so you just put the fear of everything in people's stomachs right now. So $1,000, and so they're living in this house. They love their house. They love their neighborhood.
Yeah.
And they're facing the renewal of $1,000 a month. So So instantly for me, and a lot of people, I shut down. I ignore it. I'm like, okay, I'll deal with this in 2 years. Hopefully they're down. Like I think there's a lot of people that are just kind of stuck, frozen, and they're like, in 2 years, then hopefully it's better.
Yeah.
That probably isn't the best solution. What do I do when I hear those in numbers?
So there's a lot of suggestions out there. There's different ways in the market right now. One thing that our team is doing right now is we're doing yearly check-ins with people.
Okay.
Seeing exactly where they're sitting, where their financials are sitting, and kind of starting to guide them now versus waiting till that actual renewal happens.
Yeah.
Unfortunately, with the rates, how they spiked so quickly, some people got really caught off guard. So those ones, there wasn't many strategies ready now.
Yeah.
Good news, Government of Canada has come up with some new regulation changes. So we don't need to stress test insured transfers anymore, which is going to help a lot of people at least move into and not worry about not qualifying for mortgages in their house still.
So just so that people understand, so if I buy a house and then have 5-year fixed, and now I have to refinance or renew my mortgage, right?
Yeah.
So what you're saying is I have to requalify every 5 years?
Depending on what you're doing, the answer short yes and long no. So there's 2 scenarios to play around with. To get into not much great detail, but kind of the topic here a little bit is with the new before the regulations came in, yes, you had to requalify for the full thing. Okay. Now with the new regulations coming in, if you renew with your current institution, you don't have to qualify at most of them.
Okay.
So they don't have to redo your income and stuff like that, but you also have to go with whatever rates they're offering.
Okay.
So
So you don't have to requalify, but you are still facing that high payment. So
Correct.
what's the person's option? So maybe they've been in their house for 5 years.
Yep.
What is a person's option when they look at that and they're like, there's no way in this world that I can afford $1,000 a month. I need to feed my kids
100%.
and live in my house. So what are some options?
So some options that we've talked about and worked with a lot of our lender partners on. Some institutions have the option to re-amortize their mortgage back to 25 years.
Okay, so instead of making it 20-year mortgage, you're now
Correct.
back to 25.
Yep.
Spreads it over a longer period of time,
Yep.
reduces the payment. Okay.
Correct. Some institutions have partnered with CMHC, so very high ratio insurance companies. So it's like CMHC, SAG, and Canada Guarantee, and they're allowing you to go up to 30 years, and
Okay.
sometimes 35, depending on scenarios. Just to make sure your ratios are aligned.
Yeah.
Because most of the banks and credit unions don't want to foreclose on homes, and they want
Okay,
people to be in there.
Actually, I want you to spend a bit more time on this because
Mm-hmm.
a lot of people have this fear that the big banks want to take my home. Like, I understand the fear. I used to feel that way until I got into the real estate industry. Like, what is a general, when you've talked to banks, what are banks actually wanting? Do they want to take your house?
No, that's the farthest thing. So we'll go in my collection business here a little bit. When I was in collections, the last thing we want to do is take someone's house away. We try every option available to make it work with
But
them.
isn't it beneficial for them to take your house so they can sell it and make money?
No. So
Okay.
how it works, if you go into the background of how it actually works, is so let's just say you're a regular person, can't make your payments, we have to foreclose on your house. So what would happen is we would foreclose on your house, months go by, you finally sell it, and let's just say after everything's said and done, all the fees and every costs are done, there's $5,000 left over. If you have not filed bankruptcy or a consumer proposal, that $5,000 must go back to the seller. So the bank
Okay.
doesn't get to keep the money; it actually goes back to
So
the homeowner.
so banks really don't want to foreclose because they lose money typically.
Yes.
And if they can keep homeowners take care of homes better than anyone else
Yes.
because they're home.
100%.
So really, banks are wanting to work with people to try to stay.
Yeah.
So the first thing that you suggested was one thing that banks will do is they will re-amortize up to potentially 35 years if the numbers line up.
Yeah.
But typically 25 would be the
Typically
norm.
25. Yeah.
What are some other tools that the banks use?
Some of the other ones is looking at, and one we use often is looking at your debt situation.
Okay.
So if you do have the equity in your house, we may look at refinancing it completely.
So
yes,
you bring the debt into the mortgage,
Correct.
which limits other bills that
Yes.
are piling up.
Yeah, so that's something we've been working with. Actually, had a client here just recently. They had roughly about $1,900 in consumer debt. So
Okay.
that's not including a car payment yet.
Yeah.
So with the car payment, they're at roughly about $2,600 a month in extra payments.
Oh my goodness.
Their mortgage was going up by $800.
Yeah.
So we decided they had enough equity in their house. We got a full appraisal done. There was enough equity to wrap everything into it. So yes, their mortgage payment went up to, I think we added $1,300 to the mortgage payment, but we knocked out all the other debt.
Okay.
So in that
Yeah.
says, yes, your mortgage went back up,
Yeah.
but you have no more debt. So they didn't feel the pressure of, oh, I can actually breathe. I don't have a car payment now. My credit cards aren't paid off. Paid off now. That home renovation I put on my credit cards is done, or whatever debt they had is good. So it was easier for their cash flow. So right now, a lot of us are looking at more cash flow than interest rates, because
yeah.
in this situation
Makes
right now
sense.
with rates, we're looking at cash flow. Now, if our interest rates were to come down, we can also look at refinancing your house back down to lower down that interest rate.
Okay.
That's a whole different topic to talk about.
Okay, so you're gonna, so number one, re-amortize. Two, reservice your debt.
Yeah.
And is there any other tools that you have?
The biggest one sometimes is looking at if there's items you have that we could sell.
Okay.
So, for example, a lot of people bought brand new cars.
Yeah.
During COVID, it was a great time to buy vehicles and stuff like that. Not really, because you were taking a long time to get the vehicle in.
Yeah.
But some people bought those cars because they thought interest rates would stay down this low for a long time, and some people go for the option of selling a car instead of so they can keep the house. So there's things that we talk about like that as well. And then the last option is the obvious one. A lot of people don't like talking about it, is looking at selling your house.
But
and downsizing.
But the important thing, and so you would think, I mean, you're talking to a realtor, and every realtor is waiting. Oh, I want all these houses to sell quickly.
Yeah.
And that's not actually at all my heart. I want people to be in a home, stay in a home, and if you've heard my other videos, I love how home builds community for family, builds community for communities. That's always been my heart of why I'm a realtor. I want people, homes are so important for families, and I really want to see people find the right house. But if all of a sudden it does come to a point where a person does have to sell their house, as a realtor, I would suggest this is why you need to talk to your lender sooner than later. Because if they're a month away from not being able to pay their bills, then we have only a month to sell your house, and we end up with a quick fire sale. And often, if there's a rush, you don't get the best price. So if people talk to you like 6 months, a year in advance, then there's actually a plan in place. And if you can't get their payments low enough that they feel like they can afford it, then and their house, we should at least, at the very minimum, have a 3-month plan.
Yes. Because
that way we don't have to quick fire sell their house. Yeah. We can sell their house, find them a rental, or find them a cheaper home, or find something. We want people to be in the home. Like, it's not like sell your house and just be on the street. Like, we want to find a place for people to have a home for their family and everything. But it's so important. I would say it's so important that people they aren't waiting till the end and quick fire sell their house. Yeah. Like, I can't stress this enough. No. It's so important from a realtor's perspective that we have time and that we get the most amount of money for your house and actually set them up for the future so that in the future they can get back into the house.
100%.
Or a different house.
That's the biggest thing is, like, when I was in my collection job, the scariest phone calls we would make is to people that are in those situations. And number one answer I got back is like, why didn't you call? I was scared. So getting over the fear of talking to the banks and credit unions or your mortgage broker is a good idea. We are here to help. We're not, if you're working with someone who's willing to help you and look through the situation with you, that will put at least a little peace of mind that there is some way to get through and you can come up with a plan. Yeah. Versus, just keeping it to yourself. And most banks and credit unions, unfortunately, right now, are only sending mortgage renewals and stuff out, a couple months before. And that's not giving a lot of time. So if it's not top of your mind, you're only getting that 2 months, and it's already at that point of with just a mass rush and panic. Yeah. So what we don't want to do is do that mass rush and panic. We want to kind of work together and get earlier. So that's what we're doing, the 1-year call, 2-year calls out to the clients now, because we know those rates are changing. Yeah. And with new regulations that are hopefully coming through very shortly, the big banks and credit unions and online lenders will have to send out renewals 6 months in advance. Yeah. And start making contact earlier. So this way there's no rush, and there's some more transparency across the board, which is going to be good for the industry.
That's awesome. So what I want to stress to people out of this short talk, and I hope you guys found this fascinating and were able to gain some information from this. The biggest thing is plan ahead, right? So if you're thinking that you have a year away from your mortgage renewal, don't wait a year. There's a lot of people that are good realtors, they're good mortgage brokers, they're good lawyers, they're good financial planners that are going to help you walk through this. And if you're going to try to do it yourself, it's probably going to not turn out well, right? In some of my other videos, I've shared how people need a really solid team to actually have a successful real estate transaction, or even like stay in their house. And so I can't stress enough, plan ahead, talk to Keith, talk to another mortgage broker who you trust, and talk to people that are going to help you succeed. There are lots of people that want you to stay in your home and want to see you succeed in your finances. So to build a team around you, and this is going to make your family create a place of safety. And we don't have to see these people stress and be scared of the future. And if you're living for a year in this fear of the future, that's a terrible mindset. And so any last thoughts that you would want to share for people that are coming to this place of mortgage renewal?
You know what? Don't be scared. There's going to be help for everybody out there. Banks, credit unions, mortgage brokers are willing to help. So find someone willing to help, talk to you, go through the motions. And even if it's 2 or 3 meetings before we actually sit down and actually talk about numbers, it's a really good idea to start doing that. Be open in communication, talk with your family as well, seeing if there's needs and wants you guys have. Look at your bills, look at your budget. If you're going to be doing that, you should be in a strong place when it comes up to renewal.